Well, I wouldn't say it's on top of my priority, to be honest. I always said for years that M&A in the banking industry, in particular in Europe, must come at some point in time. But most important for that is that certain preconditions are met. Preconditions from a regulatory point of view, finalization of the banking union. There are obviously, with regard to the sharply increased interest rates, you have to think about fair value gaps, given the mortgage books of a lot of banks. So I don't think that it is a priority for this year. Now, therefore, we are focusing on our own business. If in this own business there are possibilities and options for doing the one or the other smaller add-ons like we have done with Numis, then obviously we're looking at it.
You're probably not surprised to hear that every banking CEO has some sort of commentary to offer on your bank and whether you could be an acquirer. And one of the common views is something you just said about what the equity would look like if there's mark-to-market losses and if there's a write-down, where that would leave any equity valuation going into deal-making. Is it an insurmountable hurdle at this stage?
Well, I wouldn't say it's insurmountable, but it's obviously one of the limitations. But M&A is far broader. I'm always saying also to the own team, even if all the financials stick up, even if it all makes sense, you have a third question, which is very important, and it's the cultural question. Does it fit? Do you have the managerial capacity? And all this must come together, and therefore there are a lot of hurdles to overcome for an M&A. And again, we are focusing on ourselves, and I feel quite good about that.
Can I ask you about competition then in the German banking system? Because leading M&A bankers say to me, look, if you consider the market share that Deutsche has in Germany and you compare it to, say, French equivalents or Italian equivalents, they have a much higher share of their own domestic market. Is this a problem? Is the German bank backdrop just overbanked at this stage?
Well, I wouldn't say it's a problem. That is actually one of the key reasons why we went for a global strategy and for an international strategy. Deutsche Bank is doing 35 to 40% of its revenues in Germany, given our clearly market-leading private banking business. And there, our market share is actually quite good, including the Postbank M&A, which we did 15 years ago. So we feel quite well placed there. But we believe in a diversified and international approach. And if we look at our client base, these clients in Germany, they want to have one German bank which is really truly international. And therefore, yes, we are focusing on being the number one in Germany, which we are. But as important it is for us to be international successful and have a good network international. So therefore, the German question is important, but is not driving us.
Can we talk about the subtle change that is coming this year in the banking system when it comes to profitability? A fantastic period for NIMs, the expansion that we saw. Even the European banks were happy about the NIMs expansion story. This year looks a little bit different. There's the prospect of rate cuts. We're a little bit confused about what those rate cuts look like, and perhaps we can talk about that. But the NIM story is fading, meaning the net fees story is going to be highly important for the next phase. What does that mean for you in terms of any further strategy shift required?
We've been thinking about that a lot, and that was, by the way, one of the reasons why we acquired Numis last year, why we did so much investments actually into the wealth management fee business, into the fee business of our corporate bank, into the one or the other addition also on the people's front in senior M&A people in the corporate finance business. We do believe that we will see the one or the other normalization to the interest rate. It is not something which is dramatic in my view, and therefore I can already see also for 2024 quite a good NII result. But you are right, it will normalize, and therefore we already built up a year ago, actually already 18 months ago, we decided we need to further strengthen the fee-related business. That's what we did with people, but also with the Numis acquisition. And therefore I do feel that we are very well balanced from our business composition to actually deal with the normalization which we also expect.